Thank you. I'll be presenting on fintech, financial inclusion, and digital remittances using a case study in Southern Africa. So the South Africa Zimbabwe remittance corridor. Fintech refers to the use of innovative digital technologies to deliver faster, cheaper, and more accessible financial services, covering payments, banking, lending, insurance, and investments. Other fintech definition is focused on fintech as an idea, a company, such as a startup, a service, or an industry. On the other hand, digital remittances are online or mobile-based mobile transfers received into bank or e-money accounts, offering migrants speedy, secure, and low-cost services. And fintech drives the efficiency and reach of digital remittances, enhancing financial inclusion and resilience, particularly in underserved regions. Fintech innovations like mobile money, online transfers, and blockchain are transforming remittances by making them faster, cheaper, secure, and more accessible. Also, lower cost and wide access promote financial inclusion by reaching the unbanked, the undocumented, migrants, low-income earners, informal traders, rural and remote communities, supporting poverty reduction, resilience, and economic empowerment. At the same time, remittances remain a lifeline for meeting basic needs and boosting livelihoods and economies. Fintech is disrupting traditional banking in Canada by offering a digital-first, user-friendly, and seamless banking experience with no physical branches, but with efficient customer support as well as self-serve tools, allowing consumers to manage finances quickly from anywhere on digital devices. They are regulated by Canadian financial authorities to ensure consumer protection and trust. Fintechs complement traditional banks by offering lower fees, competitive rates, and innovative services through collaboration. Canada and USA are advancing in digital remittances with fast, transparent, and compliant services and rising crypto pilots. Europe's competitive market benefits from EU cost transparency innovation, while Asia's mobile wallets and digital apps drive major sending and receiving flows. Latin America and the Caribbean are experiencing rapid cash to digital shifts driven by fintech competition, while Africa's mobile money leaders are transforming transfers. I'm not sure. Ask now or later at the end?
It's up to you.
Okay.
In your picture, I don't see the Middle East because I know I'm from Bangladesh and many people work in the Middle East and sell usually.
Yes. Yeah. So it's supposed to be part of the list.
But in the previous slide, you don't have that.
Yeah. Okay. Southern Africa experienced diverse migration, with Zimbabwe as the most significant source to South Africa, driven by economic, political, social, environmental factors. Cross-border cash and food remittances, especially in the South Africa-Zimbabwe remittance corridor, are vital for livelihoods, but in-kind remittances remain under reserve. The COVID-19 public health measures disrupted the informal channels through lockdowns, travel bans, and border closures, which accelerated the shift from informal to digital and mobile remittance systems, leading to post-pandemic hybrid use. However, the links between fintechs, financial inclusion, and digital remittances are still understudied. Striking formal global international cash remittances have surged from an estimated 120 billion in 2000 to 831 billion in 2022. More than both foreign direct investment and official development assistance to developing nations. The benefits of fintechs, services, and digitalization of the remittance landscape include lower costs and affordable digital payment systems for remittances, have the potential to attain the G20 initiatives intended at lowering global remittance costs in line with part of the Sustainable Development Goal 10, which targets transactions fees below 3% by 2030. Other benefits include faster and safer transfers, increased household income, greater financial inclusion, enhanced trust in services, access to savings, credit, insurance, and stronger resilience against economic shocks. Useful technologies include mobile money technology, which uses USSD, SMS, and app-based platforms to let users send, receive, and store funds without a bank account. Smartphone apps enable real-time remittance initiation, delivery selection, and transaction tracking, with biometric verification enhancing security and preventing fraud. Digital wallets are also important in storing local or foreign currency, integrate with mobile money, and support cross-border cash or in-kind remittances like groceries and school fees. The SMS USSD interface allows basic phone users in rural or local connectivity areas to send and receive money without internet access. E-commerce integration in remittance platforms lets migrants purchase goods such as groceries for direct delivery or pickup, enabling senders to send products instead of cash. Application programming interface integration connects remittance platforms with banks, mobile money services, and retail networks for seamless cash or goods delivery, while emerging blockchain and cryptocurrency solutions enable low-cost, fast international transfers. However, adoption faces regulatory and trust challenges. Geo-tracking is also important in enhancing trust by confirming delivery of remittance-linked goods, while cloud-based analytics and know your customer systems improves compliance, detect fraud, and personalize services. The Zimbabwe-South Africa corridor spans multiple locations with significant distances affecting transfer times. And Cape Town is nearly 2,000 kilometers from the Zimbabwe border and over 2,500 kilometers from Zimbabwe's capital, Harare. Due to border delays, roadblocks, and rest stops, remittances from Cape Town to Harare can take 1.5 to 2 days to reach beneficiaries. Over the past decades, in the corridor, digital and mobile technology-based remittance channels have become essential, particularly for cash transfers. And according to World Bank data, in 2023, Zimbabwe received an estimated 3.3 billion in formal remittances from migrants abroad, and some of it came from Zimbabweans in South Africa. Fintech companies have introduced in-kind transfers, such as food remittances, facilitated through mobile and digital apps. The shift towards contactless digital food remittances in the SA-Zim corridor was accelerated by the COVID-19 lockdowns, which disrupted the traditional informal channels. Crucial remittance channels also include the traditional informal cross-border remittance channels, particularly transport carriers or Malaysias, which operate on trust, social networks, and these methods are low-cost, accessible, and commonly used by undocumented migrants and informal traders. However, they pose challenges such as delivery delays, damage to goods, and theft. Other informal remittance methods include sending money through friends, family, associates, or personal delivery of funds. The utilization of digital and mobile platforms to transmit non-cash remittances such as food involves downloading applications on mobile devices such as smartphones, signing up, ordering and paying via the banking system, or settling the bill at retail shops or through electronic funds transfer. Transactions can also be generated online or on social media and social networking platforms such as WhatsApp. Relating to the collection, after the senders complete the transactions, the beneficiaries instantly receive reference numbers via text. The beneficiaries can immediately go to specified retailers or stores in various provinces in Zimbabwe to collect their goods using the reference numbers. Truck stop deliveries across the country are also available. The availability of the services across the country highlights their spatial reach. Notably, the integration of artificial intelligence in digital remittance services and fintech companies has revolutionized the remittance landscape. For instance, AI-driven solutions enhance efficiency and user experience by enabling real-time transactions automation and 24/7 customer support through intelligent chatbots. In terms of regulations and policies, South Africa Reserve Bank regulates foreign exchange and remittances with authorized dealers and limited authority licensing introduced for non-bank service providers to boost competition and lower costs. Also, the Financial Intelligence Center Act FICA enforces customer identification and other regulations with reforms easing restrictions for low cost or low risk remittances, and draft proposal aiming to allow permit holders limited transfers without proof of residence and other documents. In some cases, requirements include valid identification, proof of address and income. At the same time, SIM cards must be registered under the regulation of Interception, Communication and Provision of Communication Related Information Act, RICA. Most migrant workers are documented, restricting access to formal financial services. However, the Financial Intelligence Center Act, FICA's risk-based due diligence, and authorized dealers with limited authority licensing have improved access via mobile and USSD channels. Mobile phone ownership is widespread, enabling use of fintech apps with authorized dealers with limited authority, offering lower costs than traditional banks, though informal channels remain cheaper and dominant. In Zimbabwe, the Reserve Bank of Zimbabwe regulations allow recipients to withdraw funds in local or foreign currency at licensed agents and ID and reference number, supporting broader financial and digital inclusion. Recent MyFood-related studies highlights the mobile and digital transformation of cross-border food remittances driven by pandemic lockdowns and disruptions in the informal sector. With limited access to transport carriers, migrants adopted contactless digital transactions and fintech apps to send remittances from home, ensuring continued support despite mobility restrictions. Similarly, recent MyFood-related research underscores the shift to mobile and digital platforms and fintech apps for cross-border cash and food remittances, accelerated again by pandemic-induced lockdowns and disruptions of the informal channels. With restricted access to traditional transport carriers, migrants also had to turn to contactless digital transactions and fintech apps, enabling them to send remittances remotely and maintain financial and household support despite mobility constraints. A MyFood-related study highlights social media's role in transactional ties. maintaining a steady flow of cross-border food remittances from South Africa to Zimbabwe, particularly during the COVID-19 pandemic, when face-to-face interactions were restricted. Social media facilitated virtual communication and information exchange, enabling migrants to coordinate the transfer of remittances with social networks, transport carriers, and digital platforms. It also shows how informal remittance processes increasingly rely on social media and mobile transactions to facilitate cross-border transfers. Barriers to digital remittances and fintech services include high cost compared to informal channels, currency volatility, limited digital access, the digital divide, gender disparities, restrictive regulations, poor infrastructure, privacy concerns, and cybersecurity risks. Challenges above are amplified for irregular migrants, the unbanked, the informal traders, and rural communities, while the intersection of migration, remittances, fintech, and social media remain under-researched. Key strategies include expanding digital inclusion, lowering remittance costs, strengthening partnerships, enhancing regulation and protection, building resilient systems, and leveraging digital technologies, as well as social media to promote inclusion and trust. Further research and policy focus are needed to explore the synergies between fintech, digital remittances, and financial inclusion. In terms of key takeaways, fintech, digital finance, and social media are transforming the remittance landscape, expanding financial inclusion, and creating vital networks that connect migrants to economic opportunities. Harnessing these innovations requires evidence-based policies, deeper research, and collaboration among researchers, policymakers, and tech developers to protect rights, bridge formal and informal systems, and maximizing the development impacts. Thank you.